First up, you've gone for Sally Beauty Holdings. Tell us why you think it's a good time to buy that recent underperformer.
So, yeah, this is my work from home setup these days. The Sally Beauty, what we did is we started looking for some of the most hated stocks. We all know the performance, like you just mentioned, the Amazon, some of the most popular stocks. So we said, well, let's sift through some of the most hated. And we ended up with three names. One of them was Sally Beauty. And it is a pro distributor, a salon products distributor to the pros, also has about 5,000 outlets. So there's this overhang with COVID, of course. A lot of salons were closed. Also, some concern over Amazon. But when we dug in, we thought, it's a pretty consistent free cash flow generator. And with a lot of these ugly companies that we called, if anything goes right, things can improve. And with a single-digit PE ratio, that was one of the ones we liked. We thought the Amazon stuff was a little overstated, and some things could go well for the company.
How tied is this to the reopening theme, though? If we see more reversals, is it in trouble?
Definitely partly tied to reopening. However, one of the reasons that the stock has underperformed was really this fear that Amazon was going to disrupt the beauty distribution and environment, even in the pro sector. So these are people that are mixing their own color and doing your hair. And what we found out is that really isn't the case. The pros still like Sally Beauty, don't like necessarily shopping for their color on Amazon.com. So they had, so Sally, it's partly a realization that, the earnings are a little, and cash flow especially, are a little more stable than people expect. So opening, definitely a catalyst, but some decent underlying trends that could push the stock forward.
You've got, in your top three, you've got another retailer in there as well. Tell us which one.
Yeah, Michael's. I am a little bit obsessed with finding retailers that are somewhat insulated from the Amazon effect. Michael's qualifies, Sally Beauty qualifies. The thing about both of those is there is a level of interaction required that you can't always get online. And in the case of Michael's, they're crafting, obviously, and they just hired a new CEO from Walmart who is involved in merchandising. And, he wants to focus on, experiential type things and being able to, help consumers with whatever sort of crafting or projects they have. So both of those retail picks are this idea of there is something that's a little bit hard to disintermediate, combined with low valuation, a history of decent free cash flow. Those were two of the beaten up stocks that I like.
And the last one we're going for, or you've gone for, is a cloud computing name, but hasn't performed well, surprisingly.
No. And, it's funny when you're looking through the bad or the ugly stocks, as I name them, and you talk to people, it's not really difficult to get the bear case on any of these. Oftentimes when you're looking for investments, you're wondering if you're going to look through rose-colored glasses. In the case of Blackbaud, they do a lot of the software for nonprofits. There's two problems. Salesforce.com is getting into their space, and a lot of museums and nonprofit organizations are struggling in a COVID-19 world. So there's not a lot going well. However, they still have high market share. Perhaps there's an opportunity for an activist. It trades at a steep discount to other software providers. So I thought, how bad can it be? And this isn't a screen for the most beaten up stocks aren't necessarily, the be all and end all of an investment thesis. But, I like to say good things can happen to cheap stocks.